Before the video will start, LiteFinance has important notice for all IBs from Nigeria. I invite you to participate in Best IB contest. You can win SUVs, $5,000 travel packages, MacBook Pros and many more money prizes. To participate, register with the link from the description under the video or in the pinned comment. Hello guys, in this video I will be talking about a very good strategy with a high profitability ratio. And of course, as always, a fairly simple one, which will be including only 2 technical indicators that will be used in this trading method. So let's go straight to the chart and see what we have for today. And so here we have the USD CAD currency pair. This is a 4-hour time frame, but for this strategy, let's use a 1-hour time frame, the more detailed one. And so let's start from adding the indicators. So first one will be the MACD. In order to do that, to add it to the chart, you go to the indicators tab and type MACD, moving average, convergence, divergence. And so we have it added down below to the down below our chart. And so as for the settings of this indicator, we are leaving them unchanged. We are using the default settings for this strategy. And so as you can see, and if you are familiar with the MACD indicator, we have the moments, let's make it bigger, we have the moments when the moving averages are crossing each other. Once one time is from bottom to the upside and from top to the bottom. So one thing that we have in mind in this strategy is that the MACD can give many times false signals, because for example, as you can see right here, we have the convergence over here. This was a good signal, but over here we had the signal to enter into a short trade. So maybe let's zoom in. As you can see here, we had the signal to enter a short trade, despite that we have begun a clear uptrend, right? Here again, we had the signal to enter a short trade, but we had clear uptrend that is continuing. And so there is a great risk that our stop loss could be triggered by this high or this one, depending on our target profits and our stop losses. And so in order to avoid that, we are adding another indicator. So again, we are going for the indicators tab and type EMA. So basically we are adding exponential moving average to the chart. And so now we need to change its settings, because we will be using this exponential moving average, this EMA, to determine the current ongoing trend. And so we're going for the inputs, the length, and we are setting it to 200 periods. So basically it analyzes the last 200 candles and draws a, we can say, average line, which indicates for us the direction of the trend. And so let's maybe change also the style to make it a bit thicker and it will be better visible. So right now we are trading only long trades when we are in a uptrend, and we are taking shorts when we are in a downtrend. So basically the moving average line is determining for us which trades, for which trades a signal only we will be taking into account. For example, if we have, let's say this moment over here, as you can see, we are below the moving average, so we would be taking only short trades. But you can see here, the MACD indicator shows us that we could potentially take a long trade, but we would not take it because we are below the moving average. Okay, so now we know what we should avoid, but now let's take a look and see the examples for entry into a trade. So let's see, we have here this downtrend, and here we have the signal for entry into a short position. So let's make it slightly bigger. So the crossover, if we even more zoom in, we can see that clearly it happened at the closing of this green candle. So you can see it over here, right? It is clearly visible now. And so let's simulate a trade entry. So our entry point will be the closing of this green candle level or opening of this red one. So let's mark a short trade example. We are entering here. As for the stop loss, we are looking for the closest highest point, which is over here at this wick of this green candle. Or if we look at the left side, we see that this is also the confirmation of this level. So let's check the highest point, which is over here. It is 28 pips. So let's add 2 pips as for the spread and commission. So let's say 30 pips as for the stop loss, and risk reward ratio 2:1. Okay, it is more or less that. And as you can see, this trade was profitable. We managed to exit at our targeted level. So now let's take a look at some long trade example. So we need to look for a uptrend, which is over here. We crossed the moving average line, and right now we are looking for an entry into a long trade, and it happened over here. So let's zoom in. So we can clearly see that at the closing of this candle, this green candle with a long wick to the upside, we have clearly diverge. The lines started to diverge, and it would be clear for us that the crossover happened, that the blue line will not go back into the opposite direction. So let's simulate entry into a long trade. So again, closing level of this candle or opening of this red candle is our entry point. As for the stop loss, we are looking for the closest lowest point, which is over here, is 70 pips, slightly big number, but if this is the moment where we should enter, we should consider those lows. So 71 pips, let's add 2 to 73 ish. Okay, this can be, and risk reward ratio 2:1. Oi. Risk reward ratio 2:1. So we need to see this 1.6. Okay. Barely. You can see that. I think it's only a matter of 1 pip or something that was lacking to trigger our take profit. But either way, if you would be at the moment in front of the desk, in front of your computer, when you would see such situation, and that your stop loss, your take profit wouldn't be triggered by, like a micro pip or something, you could be exiting this trade manually and cash in the profit. So that's the example for a long trade. And so let's check maybe some other example. Let's swipe the chart and see what we've got, and see if we find another good examples to enter a trade. So maybe here would be a good example. Maybe let's try it. So we are very close to the moving average, but the crossover happened at the closing of this candle, opening of this one, which is the level below the moving average. So let's try this one. So closing of this candle is the entry level for us. Mark short position over here. Closest highest point is here, 50 pips, 51, so 53 pips take stop loss, and 2:1 risk reward ratio. So as you can see, it is over here. And now let's zoom out a bit and see how this trade went. Long time before the price went down this much to trigger our take profit, but 106 pips I think is a good reward for the patience that it took the USD CAD currency pair to reach this target. So now maybe let's again check some long trade. This is the up-to-date moment. So let's see. This happened over here. It is the crossover happened below the 0 line and above the moving average. But I think this one would be unprofitable because most likely our stop loss is hit over here. But let's check it anyway. None of the strategies has 100% success rate. So we can see we crossed over here, and at the closing of this candle, opening of the red one, it was clear to us that the crossover happened, and it happened during an uptrend. So let's see, for the left side we are here, we can see this here, so we are looking for the closest lowest point, and it's over here. So now it is almost 60 pips, so let's add 2, it is 62.7 ish, something like that. It is okay, and it is clear for us that it was triggered over here. 2-to-1 risk reward ratio is it's not necessary to sell it over here because we can clearly see that this was unprofitable trade. But either way, let's move further. What happened later? Yeah, another crossover, but it was at slightly below the moving average. If you are a risk taker, you could take this one, and it would turn out to be a profitable trade because as you can see, the crossover happened at closing of this candle. So we would open at this red candle, this dodgy red candle. Stop loss would be slightly below this level, 41, so 43 pips. 2-to-1 risk reward ratio. No, it might be also unprofitable trade. Let's see if our stop loss would, yes, it would hold out. And the take profit would be triggered over here, but as I said previously, it would depend on a particular trader. So for example, many times I would like to take such an opportunities when I see that the crossover happened, we can say at the level of we can say neutral zone, because the slight deviation from this line, I also am thinking that I'm also treating as a neutral zone, which to be honest, many of the traders shouldn't take into account to take those positions. But hey, if you are a risk taker, if you want to try, you can afford it, then you can take such trades also. But as for this strategy, in terms of taking into account strict rules, you shouldn't. But hey, it's just an example to discuss that situations like this happens. And you can see also over here, it was very close to our stop loss, and it was a bit of luck that it was not triggered. And so okay, that is all for this video, guys. Hope you like this one. I wish you big profits, because certainly, as you can see, this strategy is a very good one. I highly recommend it for you, and it could be good either for a beginner or an intermediary experienced trader, because as you can see, it is fairly simple. The rules for setting the stop loss and take profit also are simple. So yeah, just enjoy it. Thank you for watching, and till next time.